Great day for another strategy Saturday as we go over a 30-minute time frame strategy here that is going to be focused on, well, long scalping using some of the tools, usually are mostly volatility based, some statistically based. And in overall, this strategy you can automate yourself using the tools in the link in the description below, or you can do it by hand if you decide as well. It's just, coming down to personal preference, and also just, well, personally, I'd rather just save the time and use the automation. But hey, that's me. I'm biased. Anyways, in this case, you can see that this strategy has been back tested using the deep backtester on TradingView all the way from August of the year 2020 to current time. So that means that it did go all the way through 2022, which was, more or less a downside market. And this was more or less an upside strategy. I mean, it wasn't more or less an upside strategy. It was literally an upside strategy in the sense that it was looking for long trades. So this one's had 825 total closed trades during that time frame, given just over a 69% win rate in this particular one. And other than that, these numbers that you see at the top end here, they might look flashy, they might look cool, but especially the max drawdown and net profit, just based off of the starting equity and trade size on the TradingView backtester. So, these numbers are going to be obviously dependent upon whatever you put in there. But the things that matter, percent profitable, profit factor, total closed trades, and just the overall shape of that equity curve, which up and to the right, typically good. I'll also show you right on over here before we go through the actual criteria of this particular strategy, just what it's done since, I'm trying to fit as much as I can on this screen, since like basically early December. It's actually been quite active for a 30-minute time frame. So this is, it does require a little bit more, I guess, screen time, as trades are going to be taking longer, I believe, on average. Yeah, on average, 18 bars in trades. So that is 9 hours. So going back into it right here, it seems like it's getting trades almost every day, actually. Pretty close to every day, in fact, that it does trade. Anyways, we'll go through the strategy checklist over here. I'll show you exactly how you can do it, and we'll just go down in order. So first things first, what time frame are we going to be trading? 30-minute time frame. What would be used for the main source of edge? We can use the we do use the PMARP with a 350 look back, 21 length, VWMA. I'll show you that really, really quickly over here on the settings. This indicator, by the way, completely free, but indicator PMARP right there, boom, 21 VWMA, 350 look back. Those are the important ones as far as that goes. Moving on to the next thing, HPDRV, so volatility. We want a sample length of 13 and a simple moving average length of 5. What does that look like on the actual indicator over here? Well, I'll show you. And again, sample length 13. Moving average type, SMA, 5 length right there. Those are the criteria that actually matter for this. And then we're going to be using the HPDR bands. I actually don't even have it visible on the chart right here, but you can understand why when I put it on, it just becomes like, not very legible as far as how to actually even look at the fucking chart. So I'll take it off again, but as far as the important data, sampling length 14. So that's the important piece right there. Anyways, what defines a risk management parameter? So for this particular strategy, we're just gonna have a maximum 4% stop loss. Like pretty simple actually. So the only way that you're gonna be exiting a trade is if the take profit metric gets hit, and that could still be at a loss, to be fair. In fact, that's how most of the losers do go. And then as a maximum 4% stop loss. So that will be measured from the trade opening, of course. Anyways, okay, how positions be entered. So here we get into like the nitty gritty of the actual data. We need to see PMARP below 60. Sorry, coffee coming up right now. Then we need to see the HPDRV, so the volatility moving average, have a negative or flat slope. So what do I mean by that? Well, first, let's go over the PMARP. Must be below 60 percentile, I should say. So that is here. So if you're doing this by hand, I'd probably mark this off on the chart. PMARP must be below this level right here. Otherwise no trade, no good. Moving on for the HPDRV, we're looking at the moving average right here. So this thicker white line, that's the moving average. And the prior close measured towards the current close must have either a flat slope or a negative slope. So it either must be the same or decline from the prior to the current in order to denote an entry as well. So looks like we just had one over here. Let's mark this one off. Boom. And we can see, yes, PMARP well below that region. We can see as well for the HPDRV, negative slope, prior close, top left-hand corner, white number, 73.34, current 69.73. That is a decrease. Okay, great. And then, of course, the last piece of entry criteria is that the price must be closing below the HPDR band's lower range 1, which is just a fancy way of saying the blue range lows right here. So price must be closing outside of the low side of that thicker blue range low. I'll trace it with my cursor right here. Boom, this guy right here is what I'm talking about. That one. So it must close below there. You can see that there's several closes below that region right there, but for those closes, the other criteria was not met. So I can see that the PMARP criteria was met, but the HPDRV criteria right here, it was expanding the whole way. So that's the idea. It wants to kind of save you from, getting in these positions a little bit too early. In this case, looks like it bought it right at that local low. Nice. And then up, and this one took profit relatively soon after that, which we can then go ahead and reference. What is the actual profit-taking metric? How do we exit positions? In this case, we want to see PMARP close either above or equal to 78. So we'll go back to PMARP over here, and we will put another horizontal line exactly at 78. And close enough right there. And we can see after the entry, which was this green vertical bar, we do see PMARP above that level right there on a closing basis. And what do you know? That's exactly where the algorithm did exit that trade. So nicely done right there. So pretty simple. It's more or less just about being consistent with this and making it work. Of course, there is one major optimization that I'd like to share with you as well. As always, or maybe not always, but very commonly, very, very commonly, when it comes to long strategies, especially on lower time frames, under an hourly, I do find that generally not trading Thursday or Sunday is going to be a net gain, and this one's no different. So I would avoid trading this strategy on those days. That's how this data over here was tested. So if you do trade it otherwise, and don't expect this to be consistent over here, obviously. But yeah, again, that's kind of just a general rule for long strategies. Avoid those days. For whatever reason, those are the days where, they don't typically work out all that well. Anyways, we are 7-8 minutes into this video. Kind of cool that we actually kind of already got it done, I guess. We can go a little bit into Bitcoin right now. Bitcoin right in over here, looking at the daily HPDR bands, it is starting to look a little bit more like distribution to me, just for what it's worth. Where does distribution get confirmed? It's just unhelpful because it's not anything new, but below Wednesday's low on a closing basis, especially, before we said Monday's low on a closing basis. I mean, it's still basically Monday's low on a closing basis while Bitcoin did retest it on Wednesday. Monday the 18th, I should say, not Monday of this past week, but Monday the 18th. Looking at Wednesday over here, it did, tested there with a wick, but still no closures below. So I'd still actually even just say 40,500 below there. This gets confirmed as distribution, and we probably get to play out a major Q1 pullback, the same one that I've been speaking about basically since late November, early December now, in the sense that Bitcoin, probably does have a high likelihood of a 25 to 40% pullback sometime this quarter. I still think it's probably just traditionally unwise to call it right here when the ETF is looming overhead. We had a looming recession, now we have a looming ETF. It's funny how the narratives change like that, isn't it? My personal thoughts is that the ETF, if and when assuming that it does get approved, which seems like it's quite likely, but I'm no expert in that, and I'm also not an insider, so I don't fucking know. But those sort of events probably gonna rally like as the announcement happens, and maybe like shortly after, whether it's the same day, whether it's the next day, or like a few days afterwards, but very likely the same week, we will see the actual reversal. So the question is, does Bitcoin have one more move to the upside first before playing out that nice downside move, or does Bitcoin or does Bitcoin top here? And I'd say that Bitcoin gets, starts to really confirm a top here below, again, 40,500 on a closing basis. Until then, could Bitcoin have another splurt to the upside, maybe even towards $50,000 alongside an ETF announcement and then play at a major pullback? Yeah. In fact, I still kind of think that's more likely, just theoretically speaking. But just looking at the chart right here, I mean, this is starting to actually look like distribution, which is concerning in the more near term. But yeah, I'll head off that topic anyways. Again, the focus of today, just a nice strategy Saturday. Looks like a little bit of a ball sack right there in a cock, so that's good. I don't know. Should we go through another one? Should we go through another example? Let's find a... Yeah, in this example right here, you can see that there's a loss, even though it's not a 4% stop loss. That is because when PMARP hit the take profit level, it was at a loss. Could we have waited a little bit more and be gotten out at a profit? Yes, but over time, that's just not going to be a good way of doing things. And more importantly, after that, did set up for a nice little scalp on the other side. Regaining that small loss back anyways. So should we go over this one? Sure, why not? In this case right here, very obviously closing well below that blue 50% of historic returns range lows right here. Boom. Then we start to reference PMARP, which is also pretty much below the 60 percentile level that whole way through. And then we can see that on the moving average for the for the HPDRV doesn't start to actually move down until this area right here, and then boom, we have a nice little entry and then exit right there. Lovely, and go on and live your life. All right, I think that's probably it for today. Yeah, we'll end it right there. That's good enough for today. As always, I want to wish you the best. Hopefully this one serves you well. Again, you can get the tools in the description below if you want to automate such things. If not, have fun doing it by hand, because it is actually kind of fun. But do understand that, on average, again, these trades will take about 18 bars, which that is 9 hours. So that, hopefully that's during your trading times. Otherwise, you can just stay up and never sleep again, which is good, which is really, really good for your soul, which is kind of what I feel like last night, because just couldn't close the eyes for too long. Anyways, I'm rambling on now. I apologize for that. A little bit of strategy day, a little bit of Bitcoin day. I'll leave it right there. As always, want to wish you the best. Take care, much love, and see you hopefully Sunday.